Ladies and gentlemen, episode 2, season 2. Laz here from Orange Finance. Thank you for coming, mate.
Morning.
Morning, everyone. Laz decided to come over and share a little bit of a story mostly for first home buyers, but also for people who would like to have a home loan or refinance their mortgage or something like that. So he's the guy in Perth to do it. Laz, where people should start?
Well, in terms of for the first home buyers, it's really just to get the right advice from the start. I mean, probably a third to a half of my clients at the moment are first home buyers. And you know, some of those clients I might have seen 2 years ago, and they're just buying their first home now. So a lot of the time, the question I get asked is how much I can borrow or how much they can borrow. It's not usually the right question to ask, because there's a number that the bank is willing to lend you versus a number that's comfortable to borrow. So we actually spend a lot of time just to make sure, look, what are you spending? What are your expenses? And also people forget that their expenses are probably going to go up a little bit when they own a house. So, you know, have you factored in council rates? Have you factored in water rates and things like this? And then we sit down with them to say, look, based on current policy, do you actually meet how much you actually want to borrow for the type of house you want to buy? And if not, we basically give them some techniques or numbers to work towards so they can actually end up buying a house. So the most obvious one is the savings. So a lot of people might have 5% savings, which technically the bank says that's the minimum that they require, but then when you factor in the settlement agent costs, the land gate costs, some banks charge application fees, it actually works out to be about 7 to 8%. And the other one is just the dollar amount that they can borrow. So a lot of clients might be looking to buy let's call it a $400,000 house with a 10% deposit. So let's work it out, it's $360,000 loan. But they might only be able to afford $330,000 for whatever reason. We can also look at their existing liabilities like credit cards. So the rule of thumb for credit cards is, most people have got 2 or 3 for whatever reason, whether it's frequent flyer points or zero deposit transfers. But if you've got a $10,000 credit card, it reduces your borrowing potential by about $45,000 to $50,000. So, a simple way to increase your borrowing potential, if you're not using the credit card, just get rid of it.
Same with a car, same with a car loan.
So again, if your car loan's only got 6 or 12 months left on it and you've got some savings, you can probably pay that out, and bank doesn't have to look at that anymore. Personal loans are the same. So again, the banks basically assume worst case. So even if you've got 6 months left on your car loan, they will assume it lasts for 25 or 30 years, however long your home loan lasts for. Same as for credit cards, they assume your credit card is maxed out and you're only paying off the minimum amount every month. So really getting the right advice from the start, because I've had clients who've come to me once they've already found a house. They haven't seen a broker or a bank or anything like that. And when you do the numbers, it just doesn't work. So they've put an offer in on a place where they've gone on an online how much can I borrow calculator, which is so far from the correct calculation. They spend all this time and energy, going on home opens every weekend, and then when it comes to it, they don't meet policy. It's just, A, it's a lot of stress for them. B, it's just a lot of time wasted as well. So get the right advice from the start.
And most of the times is get rid of the credit card or save a little bit more.
That's exactly right. And a lot of the times everything already works anyway. It's just for some clients where you're pushing the bounds of how much they can borrow, these small tweaks make a big difference.
You've got pretty good website on the Wiki website here.
So I created like a Wiki knowledge base for all the information I had on the website. So the website started to get a little bit too large. I think it had 50 to 60 pages of information specific, whether it's first home buyers, refinances, explaining offset accounts or LMI, things like this. And the old way that the old websites were built was, it was literally just links. So there was some functionality of a search function, but it didn't really work well. But under the Wiki framework or the knowledge base framework, you can actually just type in, what is LMI, and it lists all the articles that has LMI in it, or specifically it matches. I have actually a web, like a Wiki page which says what is LMI, and it'll just take you straight to that as well. So it's a really good way to navigate the information, and we've tried to summarize it where each page is 1 to 2 minutes long at the most. Again, like most people don't read 10 pages of information about a relatively dry topic like lender's mortgage insurance. So again, we just try to summarize the main points, and if there's any questions, then please just give us a call.
Beautiful.
Good one. Thanks, Jesse.
Ladies and gentlemen, thank you very much. Thank you, Les, for your time and for your advices, and I'll see you next time.
Perfect. Thanks, mate. Ciao.
See ya.